Hi Ronald, it's Jason here. Just answering your question about Fred and his all sources maximum with his disability coverage. So the question itself is actually fairly straightforward. With $45,000 of income and an 85% all sources maximum, he's just insurable to the extent of $38,250. Now we want to be careful here. That's the all sources maximum, which is what the question is asking. He may not be able to purchase that much disability insurance from one insurer, but when you take into account all possible sources of disability insurance, individual insurance, group insurance, auto benefits, Canada Pension Plan, workers' comp, then he's going to hit that 85% maximum possibly. Essentially what we're saying here is that taking all those into account, he could not have more than $38,250 of annual income. Now that's good, but my point with this question is really more about how you should approach this as a student. And what I find here is that people often get caught up in the numbers. So you see an income, you see a tax rate, we see three other sources of what are going to be passive income. That stuff gets confusing. And the way around that is, just as I suggest on the study guide on the website, is that you should start with the last question in the question stem. The question that starts with, based on this information. If you start there, then you know exactly what type of question you're dealing with. And the type of question in this case is a question about the need for disability insurance, or what constitutes insurable income. So now we can go through the question and we can see what's relevant and what's not. Well, we have $45,000 of active income. Obviously, that's eligible for disability insurance. Tax rate of 30%, that doesn't really help us. With disability insurance, we're not looking at whether income is taxable or not. We're looking at whether it's earned income or active income or passive income. And then we go on to see rental income, savings account interest, and capital gains from an IVIC. None of those things are going to be considered active income, so we can throw all of those out. And that's true of any disability question, that when you have that income that's purely passive in nature, it definitely does not get included in the calculation. And we don't really address this in this course, but the reality is that if somebody has a huge amount of passive income, if the vast majority of Fred's income came from passive income, he probably wouldn't even be insurable for disability insurance purposes. So I hope that helps, Ronald. It's a good question. Just want to see how we arrived at the answer, and there's a fair bit behind this question. So thanks very much.